Hello and welcome back to the channel. In this video, we're going to be going into the Fibonacci framework and going to try to answer the question, when do I use Fibonacci's and why? So we're going to be going into specific circumstances in which is the appropriate and inappropriate time to use Fibonacci, where to draw them, and how to draw them. So without any further delay, let us get right into the video. So here we are, and I, in this case, just drew in a 5-wave impulse and a 3-wave correction. So, as we know, the market is always in one cycle of the overall Elliott wave framework. We're always in like this structure, we're always in this structure, the 5-wave impulse and the 3-wave correction, no matter what. So now that we know that, we can identify that now we know we're always going to be in one of these. Step 1 is going to be identifying them, right? Which we will do in another video. And then step 2 is, now that we've identified them, where do we draw our fibs? Why are we drawing them? So let's look at this in specific. So going by the Elliott wave rules is how we're going to handle this. And what I mean by that is there's specific numbers that we usually reach. So for example, wave 3 usually reaches the 1618 multiple or higher of wave 1. Right? So in this case, I drew my fib retracement tool from the high of wave 1 to the low of wave 1. The reason I did this and technically drew the tool backwards is because I'm looking for extensions to the upside. If you draw the tool regularly, it will show extensions to the downside, but it still works in the same idea. After we know that wave 3 is, it always is the longest wave, and it is usually 1618 or higher from wave 1, we have a general idea of where wave 3 will end. Now, let's say we want to identify where wave 5 is going to end. And we'll go back and do the corrections right after this. What we'll do is we will measure the same way we measured wave 1, but for wave 3. And we know that wave 5 generally tends to end around the 127.2 to the 161.8 extension of wave 3. So as we can see here, we have our wave 3 extensions. Right here is our 127.2. So this would be an example of wave 5 ending at the 127.2. Or if wave went up to the 161.8, it would go up to here. So you're asking, okay, Logan, now we know how to find a potential area of reversal for wave 5 and for wave 3, because we want to take profits in these waves. The main reason that we're finding this is because the idea is, from our high probability Elliott wave entries, we're looking for the end of wave 3 because we're usually trying to enter in wave 2 to catch wave 3, or we're entering wave 4 to catch wave 5. So in this case, we need to know or have a general idea of where wave 5 is going to end so we can take effective profits, right? So, for our retracements, obviously, we've touched on this many times before, but our retracements, usually meaning wave 2, wave 4, and wave B, they're going to end usually around the 38.2 to the 61.8 Fibonacci retracement of the last wave we had. So wave 2, the last wave we had was wave 1. So for our fib retracement zone, this is going to be our zone. This entire zone is a high probability area of where wave 2 will finish and then move into wave 3. And that is the exact same situation when looking at wave 4. Okay? So now we've gotten down the 5-wave impulse. We know our extensions for waves 3 and 5, and we know our retracements for waves 2 and 4. Now we're going to do waves A, B, and C. So when I'm looking for take profits, usually in a corrective move, it's because I've entered in wave B. Now, how am I going to find a high probability area of reversal for wave C? Probably exactly how you guessed, taking the extensions of wave A. So we know from the Elliott wave framework that wave C usually ends, same as wave 5, typically around the 127.2, but if not the 127.2, the 161.8. I find anecdotally, I do not have the data to suggest this necessarily formatted properly, but from my experience trading, I realized a lot of the time we will reverse the 127.2 for wave C unless it is an extended wave C, meaning a double zigzag, if you're familiar with Elliott wave. So that's, in theory, how and where we are drawing them. And obviously, waves B is going to work the same as waves 2 and 4. So we're going to look for the 38.2 to the 61.8 Fibonacci retracement zone. But now that we know from a basic framework what we're looking for, let's go look at some real price examples to try to get a better idea. So I cannot think of a better idea than to go through than Tesla. In Tesla, we were looking for the low of wave C. But in the low of wave C, we know that the current correction we are in is a zigzag, meaning the low of wave C is going to be below wave A, right? The price territory of wave A, which is right here. And also, not just that, but wave C is actually a 5-wave move to the downside. So just as we were looking at the 5-wave impulse move prior, now, how do we find, thinking back, how do we find the wave 5 area of reversal in a 5-wave impulse? Cue the Jeopardy music. We measure wave 3. So this is wave 3 right here. And what you can do is you can take the low to the high in this example because it's bearish. And this was our Fibonacci extension right here, 898, which is right the level that we bounced off of. We did wick a little bit lower. So you might be saying, okay, Logan, why did we wick a little bit lower? Well, you know, we can take multiple fib levels, which brings in the concept of Fibonacci clustering, which we'll go into in a later video. But we know, okay, so this was wave 3 in the 5-wave impulse of wave C, but within wave 5, we had our own 5-wave impulse, right? So let me just highlight this for you guys really fast. This is wave 5, right? But we had 1, 2, 3, 4, 5, right? Oops, sorry about that. 5 would be right here. And wave 4 would be right there. So that brings us another level, which is the 904 level, a little bit higher than we were just looking at. And also, we can take, like I said before, think back, what are we measuring to find wave C? Besides, you know, wave 3 looking for wave 5 is looking for the extension of wave A. And as you can see, the extension of wave A ends around 918. So we had essentially a zone from this level to this level, just about. So in that zone, you could find, if not the low, exactly, very, very, very close to the low, because we're gathering multiple levels of Fibonacci from our overall framework, right? We know which waves to pull Fibonacci from, and we're utilizing that. Looking at the context, this is wave A. We're looking for the 127.2 of wave A. Okay, we have wave 3 and wave C. We're looking for the extension of wave 3 and wave C, the 127.2 or the 161.8. I really hope this is starting to make sense. That is all for this video. If you have any more questions in relation to where to put Elliott if you have any more questions of where to put Fibonacci, please let me know in the comments. I'm happy to do another video, happy to go over more live examples, whatever I can do to help get the concept across to you guys. As always, thank you for watching, and I'll see you in the next.